Hi, I'm Heather with First Pioneers Federal Credit Union, and welcome to the Money Tips No One Told You podcast. Here at First Pioneers, we love helping you understand your finances better and giving you the tools you need to be financially successful. Here, we're going to talk about financial terminology, how different accounts work. We're going to share tips that make your financial life easier, and so much more. Are you ready to dive in? Well, if one thing is evident in the South, it's that spring is around the corner. Things are blooming. The weather is gorgeous. And of course, when you have that kind of weather, often it starts to signal people starting to do those home improvement projects. They're getting out and they're ready to do some work on their home, maybe in their yards. And those projects can be small or they can even be larger. I'm wondering, have you ever heard of people using the equity in their home to actually fund the project? I know I would hear people say that when I was younger, and I never knew what that meant until I had a home of my own, of course. And equity can really be helpful in a lot of different ways. So let's start basic here to help understand this. What is equity and what does that mean? Well, in its simplest terms, equity is the difference in how much your home is worth and how much you owe on your mortgage. So, for example, if your home is worth $200,000 and you owe $150,000 on the mortgage, then you would have $50,000 in equity in your home. Now, of course, there are a couple ways that your equity can go up in your home. One is by paying down your mortgage, and the other is if the value of your home rises. Value of homes can often depend on what's happening in the market and different things like that. So your home value can rise from time to time. Keep in mind, though, the home value can also go down. And if the value of your home goes down faster than you pay the mortgage, that can also have an effect on your equity. Now, if you ever decide to use your equity, one of the things that's going to happen in that process is a real estate appraiser will have to evaluate your home, and they will then determine what that current value is so that you can move forward with a lender. Like, building equity is a bit of a process and it'll take some time, but it does grow, and usually before you really know it. So today I wanted to go over a few ways that you can build your equity in your home. First, if you make a bigger down payment when you actually purchase your home, the more equity you could have right away, as that down payment lessens the amount you would owe on the mortgage compared to the value of your home. Second, we mentioned this before, paying off your mortgage is another way that you're going to increase your equity. Of course, the longer you pay on a mortgage, the more of that payment that actually goes towards the principal of the loan. And as the principal goes down, you're building equity. Third, if you can pay more than your minimum each month, then you're going to chip away at that principal a little bit faster. Another way, of course, the longer you stay in your home, the easier it is to build that equity. As we stated before, this can take a little time. So the longer you stay, the more equity you'll build. It's often recommended that you plan to stay in your home, at least 5 years to see the home value boost and help with that equity. Now, look, there's no guarantee that your home's value will go up, but odds are if you keep it in good repair and your neighborhood doesn't see drastic changes or anything like that, then odds are the value will go up. And lastly, improvements on your home can also increase the value and therefore help the equity. Updating a kitchen or a bathroom can always add value. Sometimes things as simple as investing in your landscaping, that helps with your curb appeal. So those things can help as well. And maybe you're asking yourself right now, but how can this really help me? How can I really use that equity to my advantage? Well, there's actually a few ways. First, equity can be used towards the purchase of a maybe larger, more expensive home. Maybe you've sort of outgrown the home that you live in now. And when you leave the closing table from the sale of your current home, the equity you've built can result in a nice little profit, which can help you make a bigger down payment on your new home. Some people actually use their equity for retirement by using what's called a reverse mortgage. And I find this can actually be a little complicated, so bear with me for just a second. With the reverse mortgage, your lender will send you the funds from the mortgage in one lump sum or a series of payments, or maybe some combination of both of those. The rub is the lender adds interest to your balance each month because you're not paying it anymore. And of course, it decreases your equity. Now, typically, the money you receive this way is going to be tax-free, and the loan is generally going to be repaid once the house is sold or the occupant moves out. This will often be done by an estate or a spouse or maybe a co-borrower. But these reverse mortgages really can be a little difficult to navigate, and there's more than one way to set one up. So this is something that I absolutely recommend you see a professional before you do this. Make sure you really understand what the options are and exactly how the terms on that mortgage is going to work before you step into that. You can also borrow against your equity with a cash out refinance. Basically, in this instance, you refinance your home for more than you owe on your mortgage, and then you receive that extra money back as a payment. That extra is the equity that you had in your home. I've seen a lot of people do this for things like paying off debt, maybe paying for college or other, bigger ticket items. And once that refinance is done, you continue to have just that one single mortgage payment. You can also do what's called a home equity loan, and this is very similar to a second mortgage. So let's say you have $60,000 in equity in your home, and you're approved for $50,000 for a loan. The lender will then give you that cash in a single payment, which of course you can do it as you wish, and then that loan is paid back in monthly payments, and this is going to be in addition to your original mortgage. So you need to really make sure that you have the budget to pay this additional note. Now, for a lot of people, they do this for something like a debt consolidation. So it may work out really great because that one new payment is probably lower than all the several payments you were making before. And often this may be at a better interest rate than what you would get on a personal loan to do the same thing. Just keep in mind, if you decide to go with that kind of loan, that it is going to be a second payment. So make sure you're good and you're not stretching your budget too thin with that one. And lastly, you can also use a home equity line of credit. You may hear people say this a lot, or you may see it written a lot as a HELOC, and that's HELOC, home equity line of credit. That's what that stands for. So as a line of credit, it's kind of similar to a credit card, but your credit limit depends on the equity in your home. So for this one, let's say you have $50,000 in equity and you're approved for $40,000. You don't have to use that entire $40,000, just like you may not use the entire amount on your credit card. Maybe you want to do a kitchen renovation and it only costs $20,000. Then you only have to use that much, the amount that you need. And then that's all you're going to be making the payments on to pay it back. Using the equity in your home can be a very appealing option. We've talked about several things that people often use that equity for, paying off debt, paying for college, those larger renovations, buying a newer home. Those can often come at a pretty hefty price. And that equity that you've built can be really helpful to help you reach that goal. And if that's what works for you, then by all means, look at that as an option. I do just want to throw one thing out there for you to think about, that as appealing as this is, and it is if it works for you, it can also come with some risk. And primarily that risk is that your home is the collateral for these options. So what we recommend is first, speak to a mortgage professional to really look at your options and really what this is going to mean for you, all the costs that are involved, and all of those things that are going to go into these choices. Make sure that you're aware of all of those and that it really works in your budget and things like that. Then, now that you have all that information, really weigh if this is the best option for you to reach your goal. Again, your home is what's the collateral. So if for some reason you were to default on this loan, your home is at risk. Look, none of us set out getting a loan thinking we may default someday. I know all of us have the best intentions as we go into these agreements, but things happen. Medical issues, injuries, job loss. There's so many things that can lead us to a different income level. And then that affects how we can pay our financial obligations. So please, all I'm asking is that you just think about it carefully, really make sure that your budget is where it needs to be to do these things. Make sure you have all the information that you need before you decide to use your home equity. And of course, as always, if you have questions, we are here and more than happy to help you navigate this path, this home equity path, and help you find the best solution that works for you. Thank you so much for listening today. We hope you found this information helpful, and we'd love it if you'd give us a rating. And don't forget to favorite or subscribe to the show. There are several ways you can find us if you need further information or you need to speak with a financial counselor. You can visit us in person in Lafayette or New Iberia, Louisiana, or you can find us at firstpioneers.com. There you can find out how to become a member of our family and find out other financial information. Be sure and check out the show notes for important links and other information. And as always, we're here to help in any way that we can. We hope you have a great day, and we'll see you next time.